The spot Bitcoin ETFs have been approved. I'll be talking about how I'm handling the Bitcoin trade going forward, some things that you'll need to look out for, and I'll give you actual demonstrations of my trades in real time. I believe the future for Bitcoin is incredible, and you're right here on the front door before the mainstream can get in. Wow, awesome. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please smash that like button and don't forget to subscribe. All the indicators that I use inside the daily videos come from the service at ctksmethod.org. Let's run the numbers. It's finally here. The Bitcoin ETFs have been approved. But what's happened to Bitcoin? Why isn't it just bolting to the moon? I'll explain. First of all, let's just zoom in on this recent price action. Price is always moving structural level to structural level. So how do you see these structural levels? They're obviously in there. But Bitcoin has been trading for in excess of 5,200 days. You see structural levels through the CTKS method. What do we notice right here? We can see that Bitcoin's been coming up to structural resistance and getting rejected. Even the approval of those spot Bitcoin ETFs hasn't been enough for Bitcoin to overcome structural resistance at this point of time. But it will in all likelihood. The next important question, where can Bitcoin go to next once it passes this 46,737. The next piece of structural resistance is around that 48,250 mark. And when we just zoom out, we can see there's reasonably light structural resistance inside the market. The next one is 49,600. A following one up to 50,927. A lot of people will think there's a structural resistance level around this $50,000 mark. You can see that's not actually correct. Round numbers are retail levels. What we can see so far is that Bitcoin is just having trouble getting through this structural resistance area. It came up, there were false tweets from the SEC. Oh, Gary, how could you? Resulting in a spike up and a spike down. I alluded to something like this happening in the previous video. We lost this structural resistance area. We couldn't convert the structural resistance into structural support. So where did the price come down to? You got it. It came down to a structural support level at 45,407. It's just hung around there. And now we've got the formalized approval of the spot Bitcoin ETFs. But how do we know this isn't another fake thing by the SEC? It's very important to follow trusted advisors and trusted information sources on the internet. James is one of those trusted advisors. 1 hour ago, James said, anyone worried about this as a potential fake out again? No. The 19B4 approval order has officially hit the SEC front-facing part of the website. All 11 issuers have been approved. One thing James is suggesting, it will take some time for this to hit the street or to hit the market. In a statement by Chairman Gary Gensler of the SEC, Gary talks about the Bitcoin spot ETFs as being highly speculative and not like gold or precious metals. Nonetheless, the SEC is approving them. The way that the SEC has framed its approval letter makes it really clear that they're focused on Bitcoin only at this current time. However, as momentum grows inside the crypto industry and more people become aware of crypto, the SEC will have to fall in line. I would like to make you aware of one thing. When you go to CoinGecko, please go to categories and you'll see a section here, alleged SEC securities. get a good understanding of what the SEC alleges are securities. You can see there's quite a few here, and they're pretty main and major. What could this potentially mean? The SEC may come after these alleged securities. Now, how will it do that? What's the mechanism to do that? They would have to take Binance and Coinbase on, head on. One thing they know, one thing the SEC knows, no alt can escape Bitcoin's gravity. As Bitcoin has been coming up, look at what is happening to all of these alts. Clearly, the big boys do not want this. How much is locked in these particular projects? 166 billion. The big boys want that 166 billion to flow into Bitcoin. This means you have to be aware of what is going on. It's not a means for panicking. You just need to be aware. How should you play this going forward, understanding the strategic nature of the finance industry? In the crypto industry, we have a big advantage over retail. We're already in, and we can see total crypto market cap is coming up. Now, what do we notice about this big candle up? We've been talking about this recently. Total crypto market cap was getting into an area where it was consolidating around structural support. We can see that we have a fresh air gap, so the potential to move up very quickly is on the cards, and this was in a video that I released inside the service. The approval of the Bitcoin ETF is a game changer inside the crypto industry. We can expect that Main Street adoption now will be very widespread. Recently, because the US dollar and the 2-year and the 10-year were so strong, we saw a lot of negative momentum inside the crypto market as well as the stock market, but things look to be repairing with the DXY and the yields weakening. On top, we have the approval of the spot Bitcoin ETFs. This is going to be an incredible time in the crypto market. Ethereum has been going absolutely nuts, and it went nuts before the approval of the spot Bitcoin ETFs. Congratulations to everybody who had Ethereum trades in the market. Binance Coin was actually very weak, but with Bitcoin coming up, no alt can escape Bitcoin's gravity. We expect to see BNB surge. This month, due to the complexity of marking up all the charts inside the service, we had an express release service because it was more important that you had the structural levels through the indicator. I've put out a video inside the service going through all of these price paths for the complete month. We can see that Litecoin is obeying Bitcoin's gravitational pull, and it's getting pulled up. This is exactly what we would expect. When looking at the three-dimensional risk management paths or the CTKS method paths on ADA Cardano, we can see that ADA has been rallying really strongly. If you compare that to BNB, you can see BNB has come up, but not as strongly as ADA. Why is this the case? Because ADA has less structural overhead resistance above it. That means it can push up far more quickly. Knowing where the structural resistance and structural support levels are is absolutely vital. The question is, where is Bitcoin going to next? If you didn't have the indicator, if you were just looking at Bitcoin's price action like this, it would be really difficult to know where the structural support and structural resistance levels were. We've seen that Bitcoin has managed to turn this 45,421 structural support level and reconfirmed it. It's starting to get above all of these once structural resistance levels, but it hasn't come back and confirmed them. We always anticipate a reconfirmation, and that can be as simple as just a long wick down and then just a big push up. It is looking really good for Bitcoin, but always make sure you have your three-dimensional risk management playing out at all times. Personally, I'm expecting more upside momentum as more and more people get interested and curious in crypto. Don't forget, the big end of town has basically said that crypto is just full of scammers and criminals. It's not legitimate. But now what we're seeing is a completely different thing. The largest organizations on the planet are seeking to corner the market on Bitcoin. A lot of people get confused on the BORSOG technique, which is buy on red, sell on green. They think it only relates to if price comes down like this. The truth is, let's just look at Bitcoin under a 5-minute chart. We can see that the buy on red is buy on a retracement. Therefore, when it comes to Bitcoin, I would be personally buying on these retracements, placing my levels, hoping for a long tail down. I may get it, I may not get it. But Bitcoin is now an officially safe crypto. What does that actually mean? It means that the price of Bitcoin will naturally go up over time now. It has a fixed supply. It is a really, really safe investment, but it will be volatile. That volatility is our friend. When you look at price action like this is the ideal time to get in on Bitcoin. It doesn't mean you've found the bottom. There's no such thing. When you're looking at trading in and out of Bitcoin, you just want to make a reasonable percentage return. A lot of people say, oh, but Ken, you know what I really want? I want at least 100% per year on my portfolio. If you bought here and you sold at around here, say that's about 2.3%. And you could do this just about every day on Bitcoin or crypto. Some cryptos are more volatile than others, but recently we've seen a lot of volatility inside Bitcoin. Have a look at this gross annualized return on investment. If you're just turning it over like this, you'll make far more than you could ever make investing, because you're simply riding the waves of price. What could help you out is to see how buying on red and selling on green actually works. When you're going into the market, you look at the structural levels and you place your buy orders down below the current price or at or around the current price as well. If you put your buy levels too far down and you're not participating in price, what you'll find is that the opportunities can get away from you. What I suggest, if you're in this particular case and you're thinking to yourself, oh, I don't really know if I should get into the market or not, just be tentative, just lower your average buy-in price. It's good to have a level that you subscribe to. It could be X dollars, whatever X is for you. You could have that as a standard lot size. And we only buy at spot and sell at spot. That means it doesn't matter what's going on inside the market, we are not paying fees. Because we're not borrowing, we don't have to service any debt. And when you look at this, buying on red and selling on green is an incredible strategy. You're just riding the waves of price all the time and turning those really juicy gross annualized return on investments each time. What am I doing currently inside Bitcoin? And this is just from Binance. These little red arrows are buys. Oh, the little red arrows are sell. The little green arrows are buys. I could reverse them, but it gets really bizarre when you come to trying to figure out what your levels are. Sometimes I say the preference is do not sell at a loss. That doesn't mean your overall positions may be in a loss or a gain, because you're doing the institutional thing. You're buying when the price is coming down. You take a specific position and you just put that up at a profit. You allow the natural movements of price, because price is always moving in a wave, to take out your sell positions. It's just simply up to the market when it does so. But you don't have to look at your average price, or you don't have to look at anything like that. Look at this. When Bitcoin was absolutely tanking, you notice that I was buying. And here you go. Wow, all of these sells. And you can see now that I'm really leaning into Bitcoin. And today I've already made a couple of sells. The key is to be fearless, but not be stupid. Therefore, the question is, how do you get intelligent about what you do inside markets? When there's big major events, that's the time to go for it. Or when you see things in the market could be turning around. The approval of the spot Bitcoin ETFs over the long term means that Bitcoin is absolutely going to go nuts in an upwards direction. This is a good time to get in. A lot of people will be waiting for these deep retracements. Unfortunately, those deep retracements may never come. Just zooming in to recent price action, you can see all of these buys here. Of course, I know the structural levels, and I'm taking annualized, gross annualized ROIs out of the market, which are unbelievable. And you can see when we get deep retracements, I'm getting in. I really want to buy on the right side of the percentage. I want a big wick down because that's what I'm anticipating and that's what I'm looking for. Typically, what happens is people tend to buy on the way up and go very, very heavy and not leave themselves any dry powder. As a trader, we're always turning over our positions. We buy and we sell. We buy and we sell. We recycle our money. And as things come down further and further, for example, if we got a big long tail, you might see some other little green arrows starting to form. I'm leaning in heavily on Bitcoin, and there you go, there's another one. And I don't care at all if price goes down. In fact, I want it. I'm hoping for it because I know we're just reconfirming structure at the current time. The momentum inside the crypto market is fantastic. And you can see in real time, we're getting these buys forming. It's just fascinating. Then what I do is I take each position and I look inside the structure of Bitcoin and I place it at a gross annualized return on investment that makes sense to me. One thing, a lot of people say, oh, Ken, what do I do if a trade goes against you? If a trade goes against you, you're doing the right thing, but you must have the knowledge of what that actually means. If you're buying on red and buying effectively, you've got something that looks like this. This terrifies the majority of people, but it's the only way to turn consistent trading profits from the market. There is a whole knowledge of structure that you require. I can't just do this blindly. I wouldn't just lean in if it was just any normal day. I've seen a confluence of events that makes me say, hey, now is the time. When you get key events, you might actually increase your position size by a number of X's. When you're unsure, you can decrease your position size. For example, if you had a standard position size of 500 and you were really unsure of where the market was going, there's nothing wrong with decreasing your standard position size down to 100. If you think that you know what the market is doing and you're reasonably confident and you've done your cheat sheet, you've figured out the intercorrelations and interconnections, and you're synchronized in with the market, there is no reason that you can't increase your standard position size. For example, 500 may become 2,000 or even 5,000. And you just graduate in. It doesn't matter what your position size is. What you're seeking to do is to learn to move with the market. The markets are incredibly easy to understand. They're just moving between structural support and structural resistance levels. That's it. If price blasts through a structural resistance level, it's in all likelihood going to come back and confirm it. When it's blasting off, you don't go all in and more. As it's blasting off, you seek to get in on the retracements, therefore putting the percentage in your favor. Anything can happen inside any financial market. That's why you need 3 simultaneous strategies: a down strategy, an up strategy, and a consolidation strategy. It's not simply a case of just popping in random levels. You need to know the rules of the crypto market and the stock market. Inside crypto, Rule 45 is incredibly important. No alt can escape Bitcoin's gravity. Personally, my secret weapon is that I know the market structural levels on the Tier 1, Tier 2, and Tier 3 charts. I do the cheat sheet each day and I make sure I understand how everything is moving in alignment. I follow the news, but I don't get caught up in any FOMO, any fear of missing out, or any FUD, fear, uncertainty, and doubt. I seek to cut through all the BS and get to the signal and disregard the noise. And I know at the end of the day, what typically happens is that no matter what the news is, Price is just moving between structural resistance and structural support. Structural resistance and structural support. That's as easy as it gets. If you don't know your cheat sheet, if you don't know the intercorrelation and interdependence between different charts, you will be effectively driving blind. You don't want to do that. You want to understand Rule 446. It's vitally important. If you go to ctksmethod.org and you just scroll down, you will find wrong one. You will find the cheat sheet. And the timing cheat sheet is absolutely superb. It will give you so much insight, and it's absolutely free. This will get you hooked into the market in a way that just would take you decades otherwise. If you know where the structural levels are, and this is just the service indicator, you will understand that it takes quite a while to get through this structural resistance. We often come back and reconfirm structure. There's nothing wrong with that. This is normal price action. A lot of people say, oh, the spot Bitcoin ETFs were approved. It should be just rallying hard. Why is it doing this? Why is it doing that? When you understand structure, you absolutely understand what's going on. All that's coming in, price came into structure and then it flatlined. It got above and liquidated the shorts. Now the shorts are liquidating the longs, but this is around a structural level. How do you know that? Because you know all the marked up structure across more than 5,200 days worth of data. These are statistically significant lines. They take quite a lot of effort to put out, but if you've got the service, all of that effort is just in the indicator. It's been boiled into that, so you can just pop it on your trading view and see where the structural levels are. Of course, if you've done level 1 and level 2 standard certification, you just do it yourself. One thing to always bear in mind, please don't be scared of any negative price momentum like this. This is ideal. You're lowering your average buy-in price and your lower levels get really profitable very quickly. In the past 24 hours, as the crypto market came down on hesitation and then spiked up, some of my levels exceeded 14%. Just the ROI, the annualized return on investment, was just nuts. What typically happens is people flee on the red and come back in on the green. So they tend to buy on green and sell on red, which continuously puts them on the wrong side of the percentage. That's the death of 1,000 cuts. You can imagine you're buying on the way up here. You've got so much optimism. Oh, you'd just done so well. You may have or may not have bought the bottom, but the concept is you feel so happy. And what happens? Then it retraces. Oh no, you've picked the wrong way. You've got to get out. It's a losing trade. The key is that all professionals, when they go at spot, I'm not talking about leverage, when they go at spot, they are aware of the structural levels, and structural levels are completely different from retail levels. Retail levels are non-statistically significant. That means they're not strong. These levels are very strong, and you can already see how it's caught price in real time. And you can probably see also how long it takes to do a video. These videos do take a lot of time to do. Even though it may turn out to be 10 or 15 minutes, it doesn't take 10 or 15 minutes to do a video. A lot of people think it does. The key is when you know the rules of the market, and there are a lot of them, when you know structural support and structural resistance levels, and you know how to read and interpret price charts, know when the structural support will get action, and it will ping pong in between structural support, structural resistance, structural support, structural resistance. If it gets over, and especially if it's strong, it's likely to come back and reconfirm that as structural support before it gets going. So many times we see a lot of people going all in and more, especially under leverage, at exactly the wrong times. That's why I suggest that you learn at spot, and when you've got it, when everything is clicking in, you can go to leverage if you want after that. But of course, always do what you think is best for you. A big thank you to all the service members who reached out and responded to the questions that I had in the videos of the service. Because of your contributions, the service will be getting an upgrade. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.